missed some of that. So I was just making the introduction. I lost my connection there. So we have Iuso, who some of you met yesterday, who's the co-founder and head of business development at KYC 2020. And we're very, very fortunate to have Juan Jiménez Zaballos. Did I get that right, kind of, sort of?
Absolutely, yes.
Okay, good. Who is the head of financial industry transformation within the platforms team at Santander Digital. He's got many responsibilities, but he's in charge of building open banking, which has been a big topic for many conversations. And the combination of identity, onboarding, and open APIs ecosystem are the pieces for building up the so-called open platform. So we are meant to have a discussion here. We look at it from two different ways. But one thing I thought would be fun, or that I noticed, was I was doing a little Googling around and I found a story that said how the COVID era makes KYC AML interesting. And the quote they provide in that was, quote, and I don't know who this is from some writer. The market volatility has created opportunities for financial crime. Criminals are working overtime to exploit them, including misuse of financial services and bypassing customer due diligence. There have been a significant increase in COVID-related fraud and criminals engaging in telephone fraud, phishing scams, and even development of fake websites for personal protective equipment. So I will throw that out as a place to start and let you both talk about what you have observed and whether you actually think the COVID era has made KYC AML more interesting. And Juan, why don't we start with you, or JJ?
Sure. I'll go first. Yeah, I agree that well, maybe it's difficult to really find KYC or AML something like super sexy or interesting. Is kind of compulsory for financial institutions to perform. But it's true that under this COVID situation, as digital channels and digital portals and connectivity has come from something that we've been boosting and we've been investing into something that is mandatory and imperative, we found more and more fraud and wrongdoers and people trying to break the system more and more often. So that's why KYC and AML and the new ways of performing it and the new ways of improving our onboarding process as a bank have become under the spotlight. And all the projects that we've been running under this situation have been also boosted in terms of speed, in terms of focus of the organization, and also in terms of investments. All these projects that deal with KYC and AML is how we call it in the banca mecano. So different pieces that you have to stitch and put together under workflow, and it's always difficult to really get it right and understand all the offering and all the plethora of solutions that are out there, and find the proper one to the specific use cases that present in the financial ecosystem. So it's not the same when you have to onboard an individual than when you have to onboard an SME, totally different. Or at least, well, there are some commonalities, but there are some also specialties. That when you have to onboard a large company with lots of subsidiaries, and when you have to onboard maybe an institutional client that behaves like a hedge fund or an asset manager, it's totally different onboardings, different KYC and AML. And also nowadays, that is a challenge for the bank, at least for Santander, is to work for the fintechs in an ample spectrum of neobanks, PSPs, e-lenders, and whatnot. So when it comes to channeling payments or flows or economical flows into the different market infrastructure, when you channel payments, for example, for a fintech, you have to perform a reinforced KYC and a reinforced AML and a reinforced transaction screening and monitoring. So this is challenging. This is something that we've seen it, as I mentioned, growing and increasing the pain and increasing the focus of the organization under COVID. But I think this is something to stay also in this post-COVID space or era that hopefully we're opening now. Hopefully, I say hopefully because we are all struggling and we're all wishing for a better good, a greater good, and hopefully the vaccine is there as it has been mentioned these last weeks.
Oh, you're on mute, David.
Yeah, as do we all. So, Joseph, your thoughts on that? I mean, one part of it was onboarding fintechs, and I guess you would call yourself a fintech, perhaps? And so I'd love to get your comments on that, and then whether it has become more interesting since COVID.
Oh, most definitely, it's become most interesting, especially for the amount of money people are throwing at scams, at investment opportunities, at all kinds of things, and the scammers are now starting to remove themselves from the equation and actually directing more and more people that are already legit with KYC, that have all the onboarding, have all that other stuff. So it's great that we have all these tools that do KYC and onboarding and KYB and all those things, but they're legit. They pass all the tests. It's now starting to become more and more imperative to do transaction monitoring and adverse media monitoring and monitoring of the clients to what activity they're doing, because they're being coached. Don't tell them this, say that, fill in this form this way, fill in the form that way. And they're passing all the tests. So these criminal elements that I see now know all the loops that they have to go through, all the hoops they have to go through, and they're coaching people that have all the right stuff to get through the system. So I think it's becoming more and more imperative now. KYC, great, focus on that, get that stuff done, get the onboarding done, but the shift has to start moving towards transaction monitoring more and more, because that's where we're catching most of the fraudsters, most of the people that are involved in these scams.
Are we talking a bit about synthetic identity or something more manual than that, where just people are coached with what to use to pass all the tests?
Manual, coached. I got emails coming from this week alone. There was about 20 different people that were involved in FX foreign binary exchange, promise of 10 to 20% return in 24 hours. And you see the emails, they're being coached by these people. And I think some of these people are even believing in the Kool-Aid because they're coaching the other people, right? So it's literally, you can see the emails, the chains. We ask them for it. We're like, are you sure you're getting your money back, or you're getting your investment back, or it's going in the right spot, or whatever? And that's just one aspect. We've got loan sharking going on more and more rampantly now. We've got variable, just random gift cards or Visa cards or Apple cards going to places that don't make sense. Like Benin or Lagos or Vietnam or China, and then there's money coming in from China. So the people that are actually signing up are legit. So it's their activity now you have to really get into.
JJ, any thoughts on that?
Yeah, it totally resonates with what's happening in the financial industry, and specific in the bank I work for. Is the first top in the top of a list of the risks that we have to handle nowadays is, of course, fraud, and also a combination of fraud and cybersecurity together. And fixing or putting together, revamping our systems to be in a similar level than the wrongdoers is always a challenge. The good news is that the regulators are committed, and also that there's new technology out there based on exponential technologies at the same time that really help. I know that it's a concept that is already reviewed and everyone knows, but machine learning, artificial intelligence, data science all together to perform transaction monitoring, screening, checks, verifications, things like that. It really makes sense. So, for example, when someone comes with an important load of transactions that we can process for them, it makes no sense to continue with the same paradigm of monolithic systems. I won't mention any just to avoid any anyone feeling bad or something, but we cannot continue with the solutions that we used to handle for ourselves. But now, when we have to process, and when we have to compute information from third parties, from another banks, and specifically from fintechs, we cannot afford applying old technology, traditional technology. This has to be technology based in the new exponential phenomena that we're witnessing, like machine learning. And this also happens because these companies that we started to serve, like recently, they don't have the same level of scrutiny than we have. So we cannot go like, well, I trust that these guys are doing well, so then I process all these payments. Or I understand that this company is serious one and is listed in the market, so I won't perform any additional test. It's the other way around. We know that we are in the middle. If we are in the middle of the chain and something happens or any problem arises, we're going to be in the spotlight of the regulator. So that's why we are, at least in our case, increasing the level of scrutiny, not being comfortable with what we do even for us. We do more when it's a third-party movement or when it's a third-party payment or transaction. So I think this is something that is happening. This is something that it's came to stay, unfortunately, and I think there's a huge opportunity, but at the same time a huge challenge for the financial services companies to really take it right and to perform it in a proper manner.
So if I can abstract from that a little bit, am I on mute now? No, I guess I'm not. It sounds like you're talking to some of the young, and you're Latin or you're Iberica based. You're based in Spain. So do you have exposure in the U.S.? Do you do any work with the U.S. or not?
Absolutely, yeah. We have several businesses in the U.S. We have a retail bank in the Boston area, Sovereign Bank.
Okay, good.
We have other businesses, private banking in Miami, corporate banking in New York, and a huge consumer finance business in the South Belt. They're in Dallas and other parts of the U.S. So we're familiar with the U.S. regulation.
So are you speaking, what you spoke about earlier, is that when you're from a business level, you wish to work with the fintechs, but the fintechs, the young firms you're saying, but you need an increased level of scrutiny with them because they don't screen to your level, or you need to adjust your systems to work with the data and information they're providing, which is different than what you would have done working with other clients. Is that pretty much what you're saying?
Yeah, it's totally what I'm saying. Yes, indeed.
Joseph, I mean, since you work helping out a lot of these larger firms, do you get exposed to that? Do you have any insights or comments on that?
With regard to exposure of fintechs,
yeah,
sure,
when fintechs, because pretty much all of them have to work with a regular bank.
There's a lot of them that are babies. I would call babies. They're very naive. They don't understand the regulatory space, and when you challenge them, they give you answers that display their ignorance. But their business acumens are like, oh, we know the client, we know this, we know that, and it's like that's not compliance. I mean, at the end of the day, they need to be either hiring somebody to get them right, or they're going to get in trouble. And some of them have, but at the end of the day, they need to take on compliance seriously because it protects your business. I mean, at the end of the day, the recommendations that FATF puts out and all the regulators put out are really good guidelines on where to start. It's not the end, it's just the start. And from there, then you can add in all the components. So I see those risks all day long. There's just so many of them that come in, and they've got all the stuff right, but they don't have anybody that understands compliance. They don't understand anybody that understands KYC and onboarding and transaction monitoring and ongoing monitoring of those clients. That's where I see the biggest challenges. And they're excited to do the business. Don't get me wrong. They've got these libertarian views that, you know, everybody should be able to deal with their own money and not have to deal with these big banks. But at the end of the day, the big banks are the utilities of the financial services space. You need them. So it's best to play nice.
You mentioned a little bit there, both of you have regulation, and this is a little bit of different regulation than we heard about yesterday. But yesterday we had Tim's coffee. Of course, you got to have Tim Hortons coffee. Yesterday we'd heard, yeah, there you go. Yesterday we'd heard that regulation from a different perspective in the United States, financial stability regulation, had taken precedence and taken a lot of the focus away from projects that had been planned for enhancement of KYC AML. So is that something you've seen, or JJ, is that something you've seen at Santander? That projects have been delayed because the priorities got to be dealing with COVID-related stuff.
Yeah, sure, but I think it's totally interconnected. Hopefully we'll recover from this situation shortly, but if not, or if we have more waves, or we have new viruses, who knows? Hopefully not. We'll have more and more flows coming from digital channels, as we have experienced more than 100% of increase and growth in digital transactions and digital clients. So I think this came to stay. So the more you invest in these new onboarding mechanisms, in these new onboarding systems that can attract clients, and clients that can go, having a better user experience and customer experience and spreading the word through MPS and things like that, the more you would be incumbent in these new ecosystems. Back in the day, the people maybe the retail customer was not that much stringent or paying attention to a painful onboarding process, because when you used to go to the bank, it was something that you have to do. Maybe you don't love it as going to the dentist, but you have to do that. Nowadays, with these new behaviors, new generations, well, they don't have time for this. They don't have time for running a whole process in more than 10 minutes. So the idea would be, having the whole end-to-end process, which is always a systems or a technological challenge, but to have the whole process, the end-to-end process, in a relatively short elapsed time, depending on if it's a retail client or it's a company, because again, are different animals. But for the retail client would be starting from a standardized address and autocomplete. This is a normal experience that you get in a website or an e-commerce service, to customer contact evaluation based in the fraud risk that you can get, and also an email scoring. There are some companies that are performing this and are quite interesting, to a full customer screening, running all the sanctions, not only the OFAC, because in the US you trend to think that OFAC is the unique one. Well, there are more: EU, UN, FinCEN, Cuba restricted lists, and whatnot. ID and V, so identity and verification, also important, providing facial biometric liveness detection, digital identification, things like that, and also behavioral, so a system that can behave differently depending on certain patterns like where the client is, how is he or she behaving, things like that. And there's again a technological challenge of what to choose and why and how. And here I would say a tip for people looking into this one: go for the company that provides you with the SDK that is more flexible. And also, finally, last but not least, all about document processing, OCRs, natural language processing, being able to process automatically a power of attorney for a company is super important. And then if you're thinking of providing credit and running credit risk, you should connect all these onboarding systems with the risk workflow. And this is not an easy one, because you have to connect with all the bureau, the credit bureau checks that you can think of, a credit worthiness, the ones that are out there, or even your internal model. As here in Europe, we apply Basel IV, and when you apply an internal model, you have to show that you are connecting to the scoring or rating machinery that you have in place. So technologically wise, is a big challenge, but I think that the industry is committed to really make it properly and to take it right, and to ease the pain in all these onboarding KYC processes, and also be able to serve the client from the comfort of their houses, and not letting them go to a branch, which is always, it takes time. It can be maybe not possible for some people, So I think the opportunity is there, but you have to take it right and invest in it.
I think you've got the capstone comments there, Joseph. If you've got anything further to say about this, we've been talking about, I think the title of it was KYC, KYB Projects and Opportunities. We've talked about some of those, so why don't you wrap us up?
So thank you very much. With regard to opportunities, I think there's a lot of opportunities, and I think there's another presentation from Greg later on with regard to their product at Merlin. The ability to take data and attribute information to KYC and KYB, and be able to filter the noise, filter the information so that you get right to the heart of things, I think is really key. We can't use the old systems anymore. They're just too overburdened with data and a lot of false positives. And then you got to add on top of that the adverse media and other sources that come through the internet. I'm even contemplating things right now and just investigating how to embed the dark web information, because there is no crawler for dark web, and nothing really to find that information. But all day long, there's cases that involve it, and I have to dig into there. So I even have my own little separate PC on the side here that's just all locked down and doesn't have any connections to anything else, just so that I can get in there. But data, and attribution, and then throw as much learning as you can. I agree with Kevin's comments earlier. You take an ounce of data and it turns into, I think, an ounce of understanding, and then a pound of understanding turns into an ounce of wisdom or something like that. But I understand the concept. It's basically, you need to be able to keep building on top until you get to the point where you can distill information, because there's just too much. And that's it.
So we've got 2 or 3 more minutes for questions, and I've got one question, and I'll throw this out to whoever wants to answer it. It's from Adrian, and he says, is fraud risk analysis done on a case-by-case basis? He asked me a question yesterday about NGOs having difficulties with financing when funds went to high-risk areas, and sure, the answer was yes, certain countries it's just going to be a problem. He would like to know how they can have the trust of financial institutions, or is it impossible to go to certain countries using banks because it's too risky, like if you want to send money to Syria and money. So if anyone wants to take that in a couple of minutes, that would be great, and then we can get on to our next presentation.
I think there are certain countries that are totally forbidden for banks, and there are other countries that depend on the risk appetite that you want to run. I'm not totally sure about Syria now, but what I can tell is that from time to time, you have to block certain flows and then perform a deeper investigation, case by case or ad hoc. And to the question of is the fraud risk something that we cover in a case by case basis, the answer is yes, and cannot be done otherwise. You have to go thoroughly and deep and in an atomic approach, looking one by one, because actually is how the regulator asks for it. Total traceability of the completeness of flows that you process on behalf of a client. This is the way we perform it.
So when I look at that question, to me it looks like how can the people that are that aren't in those jurisdictions wanting to send money back to those jurisdictions trust the financial institutions? I think that's what I'm hearing or seeing when I read that question. And I don't know how you do that, because at the end of the day, as a regulated entity, for example, if somebody were to send money or receive money to Iran, 99% of the entities are banned. 100% of all the banks are banned. You can't deal with them, right? So if somebody wants to send money back or receive money back, unfortunately, the regulations just chop it up. So that's why you're seeing a lot of these hawalas and other things that are crypto and these other different mechanisms taking that traffic on. But it's dangerous because you don't know if you're fighting terrorist financing. You don't know if you're laundering money for some criminal in Iran or whatever. But as an institution, I'm sorry, we can't trust you either, right? So it's a double-edged sword.
So I want to thank you both very, very much for a great discussion. We're back on schedule, so I'd like to move on to the next presentation. But both JJ and Joseph, thank you very much for the time, and especially taking the time on a Saturday. Okay, guys.
Been a pleasure. Thank you very much, guys. Cheers.
We have